Hey folks, Joe here from JCS-Charting. What you see here is the smart money flow index at the bottom, and you see it's pretty flat for the entire last week. That means smart money, the big guys, are not participating on that latest run here of about 800 bips to the upside. That tells me the final low for the summer or autumn is not being set yet. We should see another leg to the downside. Let's hop into it. And here we see a crucial gamma update. I came out a bit too late, which forced me to hedge because we had a very large gamma exposure at the 24,000 level, and that got being sold, and that was that selling Thursday and Friday of the week prior. So I was wrong with my theory that we go up first to see 25,000, 25,500. So we hedged here all the way down to, I think the low was at 23,400, somewhere around that. And now while we compare the last chart to the latest delta gamma change between last week, that were the changes of August 4th till August 8th, we see there is a huge exposure of negative gamma at the 23,000 level, also at 26 and 26.5. I still remain my bearish bias for August. So I think this level here is more relevant. This here will be rolled over into September. And this one here should be our master that we are dumping a bit deeper into August. We go into my Discord. This is the DAX channel here, the H4 thread. This is an update from the 1st of August. Here you see quite a large explanation because it's getting a bit complex. I talked about an ending diagonal triangle, a so-called EDT. And this looks actually quite suitable for that. However, I am running out a bit of time. If this year is going to happen, we are running complete vice versa to the US markets, in my opinion, because I see still selling into August, and DAX is somewhere right here. Here's the trend line. We are going to look at that in a little bit. And by the way, last Friday was buying time because of our sub-cycle low right here. I started buying with that last candle because we were in that time frame of that sub-cycle low. We retraced 78.6%, by the way, and then we started riding all the way to that line, and we are looking at the live chart now. And here is that live chart we just talked about, the descending broadening wedge. Starting point is here at that all-time high, 24,639. Second point is 23,921. That is the second touch at the upper line, 24,514. And that is that low on that Friday on the 1st of August, which we bought. I must say I was selling that way too early. At that chop area right here. However, that cycle low got confirmed quite early. They are confirmed while we rally 200 to 300 points. And then we went all the way up for the third touch at that upper TL at 24,392, and we pulled back, which is such a typical behavior of a descending broadening wedge. And usually these patterns are used as a consolidation in the trend up. Now the big question is that low here, which was another sub-cycle low on Friday. We also determined that right on time. I kept holding my shorts, by the way. Is this going to be the pullback for the breakout to the upside? There are still open targets of that green sequence, or is it just another backtest of that trend line before we sell into August? This is my scenario I prefer, by the way, selling into August. For the case we break up here around 24,365, that level. If we breaks through there, I really would, well, there's no advice here, but I'm going to hedge all my shorts if this is the case and if this is going to happen. Remember, we have a lot of negative delta right here. And by the way, that consolidation here, which took already, roughly a month now from that all-time high. The all-time high was on July 7th. It didn't even hit the 23.6 retracement of that entire April rally. So usually that is an absolute minimum requirement, even in a bull run, as a healthy correction. And a quick check on the volatility side of the DAX, the so-called VDAX daily chart here. And you see that pop-up here, which occurred on the 31st of July. It usually doesn't come alone. There's usually a second part of it, like what we have seen here. Second part was that pop-up, same here, first pop, second rally. And there is a low suggested, but I assume these cycles here are about to shift. We also have an astro turning date in the middle of tomorrow, on Monday. And also check on the volume indicators. The down volume is still much stronger than the upside volume. And that suggests usually there's something behind the scene going on at DAX. And we're going to switch into the US markets. By the way, this is my Discord here. Here you see where I publish the Gamma Open Interest and Volume reports. This year is for the SPX from the 26th of July. And I showed the changes of the Gamma. You don't see now the 6,400 level. There were also large deltas for the gamma exposure, but I also kept an eye on here on 5,900. That got opened during that week, so there was a lot of gamma exposure around that level. And for some reason the data is not updating right now. I try to give that at the end of the video. The data just updated, and what you notice is here were large bars. You didn't see it in the last picture, and they all got reduced. Especially there were negative buildups at 5,655. There was also a negative buildup at 5,8, and also large exposures at 6,000. There's a very high probability, in my opinion, that we revisit these levels again. And here is a volatility of the S&P 500, the so-called VIX. That wedge you see here in blue is in that chart already since we draw that line here, that green line. We went for a low at the beginning of July into Independence Day, and then we broke that cycle start here quite early with that low. That told us that we are going for a negative cycle, most likely into the end of July. This is what happened. This projection here, by the way, was in the chart before all these candles were in here. And if you don't believe me, you're welcome to join the Discord at www.jcs-charting.com. Now, we got that pop-up, and the same story as at DAX. There is usually a second leg, another pop-up associated to the upside. Either we see that with a divergence forming in volatility, that means we are making a higher low right here, or with a lower low. It doesn't really matter how it's going to happen. Once we hit that line, the index is extremely short. And if we are starting to rally in volatility with the index making new highs as well, that is the other warning sign. So it doesn't really matter how it plays out. There should be another pop-up in volatility. JFD chart, S&P 500, a 4-hour time frame. Here's that high I missed out by 4 bips to sell. At the all-time high was at 64.37. I was going for 64.41. I had a massive short order right here. That didn't work out, so I missed that entire selling leg. However, I bought once again right here when everyone started to freak out. Once again on that Friday, I bought and I was holding until here, and I thought, well, there's that next leg coming to the downside, and I was definitely wrong here. I started hedging again. There was another leg up, then I saw it's an ABC. By now I think we are in another ending diagonal here. 1, 2, 3, 4, 5. Most likely we're going to see that red resistance zone if we make an hourly close above for 64.39, even higher levels into 6,500 are possible. And same story here. People keep oversizing their positions while shorting the market, so they start to freak out once again. Guys, you need to be aware of trading psychology. That is about 80 to 90% part of all these moves which are happening. I wrote a huge chapter on psychology involved in trading. The 3 killers, for instance: hope, fear, and greed, or how you position yourself, how you use the proper amounts, that you have to be proper capitalized. One of the biggest mistakes retail traders do, they think they get rich very fast. This is not going to work. So let's come back to the chart. Again, I assume we're going to run into that red resistance zone before we start that correction. If there is already Globex selling in the overnight session, be careful. But there was an hourly close already above that candle right here. I think we had 63.94. That opened another sequence, so I assume we push a little higher before we turn around. Astro turning day tomorrow here as well. Let's talk about NASDAQ 100, and I would like to show you that chart here. At the bottom you see the average of stocks above their 20 and 50-day moving average, 20-day and 50-day. And we see NASDAQ at all-time highs, at least for the cash market. And you see that divergence here. Most stocks are not participating at that rally. Well, you probably noticed that Apple, Tesla, and Alphabet were rallying like crazy, especially Apple with 2-5% days in a row on Thursday and Friday. That means the broader market is not participating at that rally. So there's a very large tech divergence occurring here at NASDAQ. And also the H4 time frame, a JFD indication here, NASDAQ didn't make a new all-time high yet. That was a future of the all-time high. It didn't occur at the cash market, but that high here, I think this was here the all-time high at the cash. We broke through that and we closed on that all-time high on Friday. However, this indication doesn't show that yet. I got 23,680. Either this level here rejects very hard, that is that first resistance zone, or we trigger that zone higher for 23,957 up to 24,069. But we need a 4-hour close above that green 100%. This seems to be a fake out that triggered down here at 22,725. Well, if we turn around before 680, this one is still alive. Be aware of that also. Lots of negative gamma on the delta reading at 21,000 here at NASDAQ 100. Last but not least, the Dow Jones. Daily chart here, cash indication, inverted shoulder head shoulder pattern. I'm showing that for a very long time. We triggered higher, we retested the green 100%, but there's something odd at the industrials because we topped out way before the tech indexes did, the S&P 500 and the NASDAQ, on the 23rd of July. We didn't hit any min targets yet. However, that sequence remains active even if we drop and retest that neckline. And So we have a bearish divergence, an intermarket divergence between the Dow Jones, S&P, and the NASDAQ. And there was a daily so-called pop gun. That means that little candle here is trapped in between this one and that candle, and that gives us trigger levels at 43,799 and 44,498. That would be my wish, that we pop to the downside, retest that neckline or even a bit deeper, and then we pop back to the trigger. That's what I like to trade using these pop guns. There's also the possibility that we pop up and making new all-time highs, and then that divergence is gone. We'll see. The industrials are the weakest lately. They had the biggest sell here on Thursday and didn't really recover. They made another inside day, so on Monday there could be another pop gun. So we have a double pop gun here. And usually when these inside days leave that previous candle measured from the high to the low, there is usually a kind of explosive move in either direction. So I assume the industrials are leading to the downside. They started the correction already, while the others are not quite finished yet. And here we have Apple. This projection is in the chart since the end of June. I haven't changed anything at that. We didn't get that selling zone here at 220. That is our 100% trigger of that green sequence. However, as you can see, these projections are usually also time-based. We got that high right at the beginning of July. Then we got that sell-off to retest that channel. And then, as I said already, on Wednesday, Thursday, and Friday, we got a massive rally. At Apple, I still assume that is part of that leg here. That is the second part of it. So we triggered now above 220, so we should see 234 and 239. We have still options running, by the way, and we also bought raw stocks right here at that low at $170 at Apple. The options I will most likely sell here, the raw stocks I will hold. I still assume here also a little correction part into autumn. Well, Tesla, daily chart here, and we came up with that symmetrical triangle a while ago, and we are still waiting for that third touch here to trigger that triangle. I said I had much higher targets. We got now the second rally for Tesla. I'm a bit unsure here after we going to make a pop-up if we are going down again at Tesla. Remember 344.69 triggered for higher. That means these are our main target. 380 to 394 is still valid unless we break these lows from April 7th. So as long as they hold, I must say Tesla still remains bullish to me. This is just a sideways consolidation to kill time in my point of view. Yeah, that's about it. Couldn't make an update last week, so I hope I covered everything for this one here. If you liked that video, you can leave me a nice comment or a like, and I wish you a nice remaining Sunday. I see my JCS members tomorrow at the block. Bye-bye.